What's going on, everybody? Crypto Headquarters here, and in today's video we're going to be talking about the cryptocurrency market as a whole and why cryptocurrency has been struggling moving into the end of May. We're going to be going over some of the potential factors that may have caused the initial devaluation of the cryptocurrency market and why we're seeing prices across the board drop left and right, and when we could potentially expect another rise, another resurgence like we saw at the beginning of May. But with that, I'm going to be jumping into the disclaimer, which states none of the information in today's video is investment or financial advice. This is simply my personal opinion. Please do your own research before investing. Invest at your own risk. Don't invest more than you can afford to lose, and consult a financial advisor if necessary. As for transparency purposes, I'll do my best throughout the video to let you guys know if I am or am not invested into the cryptocurrencies that I talk about. But with all that said, let's jump right into it. Whether or not you're a cryptocurrency enthusiast like myself, a regular investor, or even a new investor to the space, you guys are most likely aware that the past 2 to 3 weeks have not been very kind to cryptocurrency and the market as a whole. So while we were bullish moving into the month of May, since then the bears have taken over. They've regained control and the market has spiraled down as many cryptocurrencies have not only lost price but also their overall market cap, as we've seen the whole market suffer as money moves out of the space and is not coming back, at least for the time being. Now with this, we've seen Bitcoin drop all the way below $7,400 and Ethereum all the way down to $586 as I record this video, down from its high at the beginning of May, as many altcoins peaked at that point in time, at least for the time being, coming out of that bear market. And we saw again Ethereum at $830 all the way down to $586, showcasing just how far we've come in the short amount of time in terms of the bears regaining control. Now, throughout today's video, I'm going to be going over some of the factors that may have contributed to this bear market that we have somewhat gone into moving into the end of May. And this is evident, and you can look at it in terms of total market capitalization and the market cap of all cryptocurrencies. Moving into the month of April, we bottomed out in terms of the bear market that we saw. We were just about and hovering around $250 billion before we saw just a trend upwards moving to the end of April. And at the beginning of May, as I mentioned, we peaked, at least for the time being, at about $470 billion, all the money in the cryptocurrency space and market cap. But since then, though we got an upward trend there, we are now trending in the wrong direction, and it seems like we have somewhat leveled out and seen a slight consolidation between May 23rd and May 26th. And obviously I'm pretty zoomed in here in terms of the grand scale of things, but we're going to see what this means for the future, because moving into the 20th of May, we lost a lot of money within the space, and as you guys can see, as it is reflected within the top 100, it has not done well for the price of cryptocurrencies or even your portfolios. So now I'm going to be transitioning into some of the news that has contributed to this. Now I'm going to be doing my best to run through this as quickly as possible and get you guys the most concise information as possible. Now again, all of the articles in today's video are going to be linked in the description down below as always, so make sure to check those out if you are interested. Some of the recent news that has contributed to the recent price sell-off of cryptocurrency comes straight out of China, stating that the recent sell-off has come from the news that in China that the ICO, otherwise known as initial coin offering market, is still very active, and there are fears that China will further increase the strict regulation. For those of you guys unfamiliar, I'll give you a little backstory. China is a country who has been very anti-cryptocurrency since the beginning, or at least since September of 2017. Now, in September, we saw a few things happen. We saw an outright ban on all ICOs, and we saw the ban of all cryptocurrency exchange trading within the country. We saw multiple exchanges relocate to Hong Kong, and since then, we've seen further regulation be put in place. We've seen Bitcoin and other exchange trading websites be blocked behind China's Great Firewall to limit access, and additional to that, we've seen them come down, even working with banks to make sure that people's accounts weren't be using to fund cryptocurrency investments. Now with this, China is aware, the government is aware that ICO or initial coin offerings and the market for that is still very active despite their very hard stance against ICOs. Even though China has banned the cryptocurrency exchange trading, they hate ICOs even more than they don't like cryptocurrency. Now with that, they know the market is still very active, and what you're probably wondering is why people are so upset about stricter regulations if ICOs are already banned. People believe that if China is to put these regulations, even stricter regulations that are currently on now, it would have an adverse impact on the cryptocurrency market as a whole. The government reiterated its position, stating certain risks cannot be ignored in regards to ICOs, pyramid schemes, and fraudulent behavior. The report compares the current climate to the early days of the internet, advising the public against excessive speculation and false propaganda. So while the SEC and the United States has not come out and banned ICOs, and they've definitely taken a more precautionary approach to regulation, and they haven't done anything too drastic, and we still don't know what is considered a security and what is not, but that's a discussion for another day. In regards to China, they don't like ICOs for the same reasons the United States doesn't like them: pyramid schemes, fraudulent behavior, exit scams. A lot of people don't know what they're getting into, and it's very easy for projects to manipulate investors. But with that, at the same time, cryptocurrency fundamentally goes against some of the government structure that is behind China. A lot of it is centralized, and they want to keep it that way. So in addition to the regulatory fears, hype surrounding a possible rally following Blockchain Week and the Consensus Conference in New York has proven to be a dud. So Consensus is the biggest blockchain conference in the world, and that happened a few weeks back. Now with this, we saw last year, following Consensus, we saw a ton of new money pour into the marketplace. We saw cryptocurrencies see a bit of a resurgence around that time, meaning that they got a boost in price, and Consensus gets a lot of people, at least last year it did, excited about cryptocurrency and new projects. Tickets to this event range between $2,000 to $4,000. I heard numbers being thrown around in past YouTube videos. So not only is it a very limited event in terms of who and who cannot attend, at the same time, many people are interested. And though people like Vitalik have been boycotting and against CoinDesk this year, and other people have jumped onto that, it still, for the most part, didn't stop the conference from doing what it usually does. However, this year, unlike last year where many people got excited about cryptocurrency and they watched the live stream, the same thing didn't happen. And obviously they're two very different situations. However, the co-founder of Fundstrat Global Advisors, Tom Lee, who is famous for his bullish predictions on Bitcoin, look those up. They are definitely something to look at if you're interested to see what Tom Lee has to say, admitted that his prediction of the post-conference rally was wrong. And I'm somebody who thought that Consensus would actually pump the market, at least for the time being. Consensus was a big event at the time, and I think it was exactly what we needed going into the month of May. I thought at the time that there would be a lot of people not only getting bullish again on cryptocurrency, believing in blockchain tech, especially with a conference out there that showcased so many projects that many people may not have even heard of, that more money would flow into the space and people would get again bullish on cryptocurrency. But unfortunately, that didn't happen again. I'm also going to bring up another article here that makes a distinction between two types of regulations in the space. So a common theme you've seen throughout the video today is the idea of regulation, and I do want to point this out. So a distinction should be made between regulations designed to restrict or ban the use of cryptocurrencies versus those designed to reduce market susceptibility to manipulation. While the former certainly would appear as bearish, whereas the latter could be considered bullish, the reality is that it's difficult to correlate regulatory announcements with price direction. So some regulatory news actually could be considered bullish. Now, when we talk about regulation, and we talk about the regulation that we're most likely going to see in the United States from the SEC, this is the former, where we're going to talk about regulations that reduce market susceptibility to manipulation and keep the consumer safe. They get rid of the practices that involve exit scams in regards to ICOs, pyramid schemes, etc., and put more knowledge in the hands of the investor. While when we talk about the latter, where we talk about the restriction or ban of the use of cryptocurrencies like we saw in China, that is definitely bearish news, and we're seeing that showcased in today. Though keep in mind that most people don't correlate these as two different things. They hear regulation, they automatically think it's a bad thing, and while most exchanges obviously don't like regulation, and some people, or a lot of people in the cryptocurrency space don't like regulation, hence the reason that they got into cryptocurrency in the first place, in a lot of situations, we know it's inevitable, we know it's on the horizon, it's just how we deal with it and what's coming in the future. So regulation doesn't always mean something bad, and though it oftentimes is synonymous, that's not always the case. Moving on, I do want to point out one final thing. So the market's negative performance suggests that despite increasing provisions to facilitate mainstream investment in the crypto space, notably with the recent trend to provide custodian solutions for institutional holders, more robust regulatory guidelines and clarity are still needed for traditional financial sector capital to come in. So many people believe in 2018 that we're going to see the rise of institutional investors come in and just pour money into the space. They think that the floodgates are going to open, and this is going to be the year that we don't see a ton of retail investors really controlling cryptocurrency, and that's not necessarily the case right now. However, it is undeniable that the majority of institutional money has not flown into the space. Now, with that, what they do point out here is that though there are solutions being put in place that is allowing these institutional holders and these mainstream investments to come in, we're not at that point in time yet. More robust regulatory guidelines, aka the SEC, is going to have to come out and put more provisions in place before people feel completely comfortable with putting money into cryptocurrency, and clarity in regards, again, to what is a security, what is not, in order to make sure that cryptocurrency is more of a sound investment than it is currently. Also, something that I do point out is a new government-led study detected 421 fake cryptocurrencies in China's crypto space, which you can see why the Chinese government, again, is very much against ICOs and cryptocurrency. Even though a few bad apples in the bunch shouldn't ruin everything, that's China's stance on it. Now, at this point in time, I do want to quickly go over some of the news out of the United States. I know we talked a lot about China, but this is a little bit dated of an article. This was written May 1st. However, this stuff still stands. So the SEC does not rule out initial coin offerings. Again, while China does ban ICOs, the United States has taken a slower approach to this. The SEC Commissioner Robert Jackson, offered his perspective as a regulator on the struggles faced by retail investors, stating, "Keep this in your head. Investors are having a hard time telling the difference between investments and fraud. Down the road, I think we will be thinking about ways to make those investments work consistent with our security laws," meaning that they want to work with ICOs and the projects that are trying to raise money instead of potentially trying to outright ban them. So while this is tentative and this is obviously subject to change, this is just a statement, but coming from the SEC commissioner himself, I don't think that ICOs are going to necessarily be potentially outright banned like China. I don't know if they're going to take that polarizing of a stance on this, so that is good news in regards to that. However, regulation is certainly to follow, and it's going to be interesting to how they do that. So ICOs not banned in the United States, however, they are definitely being looked at with a close eye from the SEC. Moving on here, obviously this will be linked down below so you can check out everything. I'm only going to talk about two more things. So Coinbase is in talks with the SEC to become a registered brokerage firm. So Coinbase is in the process of becoming a licensed brokerage firm and electronic trading venue. The reason that this is going to happen, the reason this is important, I'm including it, is because we don't know what is and what isn't considered a security at this point in time. If Ethereum, I'm just throwing out random cryptocurrencies out there right now. If Ethereum is to be considered a security, Coinbase would have to be a registered exchange and compliant with all SEC rules and guidelines in order to allow Ethereum to be traded on their platform. Meaning that if Ethereum is a security and Bitcoin's not for whatever reason, they'd have to get rid of Ethereum and they could keep Bitcoin, or vice versa if the roles were switched. So if Coinbase is a licensed brokerage firm, no matter what, they're going to be able to trade securities and non-securities, whereas right now, since they're not licensed, they can't they're not allowed to have those securities, which again, we don't know what is and isn't the security on their platform at this point in time. And it seems like Coinbase is taking a proactive approach to this. And this is old news. However, it is important to note as well that Coinbase is going to continue to see adoption. We're going to see those new coins come in the future, especially when Coinbase has more direction in terms of what is and what isn't a security. But that's pretty much gonna do it for today's video. Obviously, there is a lot more information in this Medium article over on Hacker Noon, written by Phil Glazer, and this will be linked down below as it is very interesting. But that's some of the reasons that the cryptocurrency market as a whole has been struggling. We talked all about regulation. There wasn't a ton of news that was really like a bombshell, like this is why crypto is crashing at this point in time. However, keep in mind, it's a lot of small things, and it's a market attitude as a whole, and there certainly isn't a ton of news contributing to bullish indicators at this point in time. However, Bitcoin has seen these kind of dips in the past, so has Ethereum, as well as a ton of other altcoins, and they always seem to bounce back, or at least Bitcoin does. So hopefully we are going to turn bullish in the future here. But hopefully you guys learned something from today's video. Comment down in the comment section down below if you have any questions, comments, or just any thoughts on today's video. That's going to do it for the video today, guys. Thank you guys so much for watching. Make sure to hit that like and subscribe button, guys. I'm going to be jumping straight into the disclaimer, which states none of the information in today's video is investment or financial advice. This is just simply my personal opinion. Please do your own research before investing. Invest at your own risk. Don't invest more than you can afford to lose, and consult a financial advisor if necessary. As for transparency purposes, I believe the only cryptocurrency I pretty much talked about today was Bitcoin. And I'm not investing in a Bitcoin in the time making this video, and I don't hold Bitcoin in my portfolio. So that's going to do it today. Again, make sure to hit that like and subscribe button. A lot of new videos coming out on the channel. So thank you guys so much for the support, and make sure to have a great rest of your day.